Hey, crypto family. Hope y'all are doing good today. So, I got a couple of news articles that you may or may not have heard of. One of them being very important is by Coindesk, and it says the SEC rejects Bitwise's latest Bitcoin ETF proposal. So, I went over this in my video a couple of videos ago, and basically I mentioned that Bitwise was one of the companies that was looking to launch a Bitcoin ETF. As you know, Bitcoin ETF is an exchange traded fund similar to the S&P 500, so it's geared towards mainstream investors, big investors looking for that stability, looking for that actual backing and that security that ETFs provide. Now, Bitwise is a company that's been trying to get their ETF approved, and it's been a while. And October 13th was actually the date where the SEC had to say, yes or no, would this ETF be approved? They could not push it down any further. So there's a lot of other companies such as VanEck that actually tried to launch an ETF as well, but were rejected or actually withdrew their application for an ETF. But Bitwise stuck with it. And unfortunately, today we realized the SEC rejected its proposal. Now it says, quote, the commission is disapproving this proposed rule change because, as discussed below, NYSE ARCA has not met its burden under the Exchange Act and the commission's rules of practice to demonstrate that its proposal is consistent with the requirements of Exchange Act Section 6B5, and in particular, the requirement that the rules of a national securities exchange be designed to prevent fraudulent and manipulative acts and practices. So basically what this means is the company Bitwise, they did not prove that they could prevent fraudulent and manipulative practices. So again, you saw the big swings in Bitcoin. Bitwise basically, was not able to prevent that. Therefore, their ETF did not get approved. Now, that's very hard to watch over manipulation and to prevent it because, as you know, so many people trade Bitcoin nowadays and there's tons of manipulation going on. So that's something that's going to be a hurdle down the line when trying to get an ETF approved. And it says, quote, to date, the SEC has rejected all Bitcoin ETF proposals, citing market manipulation and fraudulent activity concerns. Bitwise tried to reassure the regulator that could address these issues, publishing a number of reports highlighting what it saw as the real Bitcoin market and showing that market activity correlated tightly with the regulated Bitcoin futures market. So, again, this may boil down to just only looking at Bitcoin on a few exchanges and regulating it on those exchanges very, very tightly to prevent manipulation. But again, that still will not affect the full picture. So it's going to take some time to just basically the more people that invest in Bitcoin, and then the less money can affect its moves up or down. The more basically just like stocks are today. They don't swing plus or minus 20% all the time. They swing maybe plus or minus 0.5% or 1%, if that. So that's something I see further down the line as mainstream adoption increases. So just keep that in mind. This may be some FUD going around today, so you may see Bitcoin decline because of this, but just keep in mind that, again, it's nothing new. Bitcoin ETF has been pushed down the road, it hasn't been approved, and this is something that's going to be more long-term than short-term. Now, second article we're going to talk about is the IRS, and this is, again, by Coindesk, and it says the IRS just issued its first cryptocurrency tax guidance in 5 years. So this has been a big topic, taxes. I know, people are weary about paying taxes on cryptocurrencies and basically trying to, find out the best way to go about that. Now, as always, it's best to pay your taxes. Always pay your taxes. Follow the rules and regulations and do so. But there's so much ambiguity with cryptocurrencies that many people are like, hey, I'm not sure exactly how to pay taxes with cryptocurrencies. What's counted as a tax when I trade it, when I sell it, how long I hold it? Is it capital gains? Is it property tax? I mean, there's a tons of things right now. And IRS is slowly but surely coming out with certain rules and regulations and guidance to show people exactly what is a taxable event. It says, industry members have been eagerly awaiting the update since May 2019 when IRS Commissioner Charles Rettig said the agency was working on providing fresh guidance. The agency's 2014 guidance left many questions unanswered, and the crypto market has grown more complex in the years since. It says, Drew Hinks, a lawyer with Carlton Fields and the general counsel to Athena Blockchain, told Coindesk that, quote, from the tax collector standpoint, this is the right answer. Though certified public accountant Kirk Phillips said he was surprised that the guidance basically only addressed forks. So it says tax liabilities created by cryptocurrency forks, the acceptable methods for valuing cryptocurrency received as income, and how to calculate taxable gains when selling cryptocurrency. So as you know, forks, basically a fork is, say you hold a cryptocurrency such as Bitcoin, and say it has a hard fork with, such as, for Bitcoin Cash, and say you hold Bitcoin and you get, let's just say for every Bitcoin that you hold, you get one Bitcoin Cash. Well, that Bitcoin Cash is actually looking to be taxed when you receive it. So that is something that's out of your control in a sense, in a way that, you're just holding Bitcoin on exchange. If they happen to support that airdrop or support those forks, then you can't really affect that, and you do end up getting taxed on that. So a lot of people are kind of saying, hey, this isn't right. What if I don't want to be taxed on it? What if, I don't want these hard forks? What if I don't want these free coins because I will get taxed? Then it'll create more confusion in the future. Well, that's something, again, that they're continuing to fight with. And it says, quote, one unfortunate consequence of this guidance is that third parties can now create tax reporting obligations for you by simply forking a network whose coins you own or foisting on you an unwanted airdrop. So exactly like I was saying. And it says individuals would be assessed income when they receive the assets. So there's, long story short, the biggest thing of this is just the cost basis, like it says here. So say you invested $4,000 in Coinbase to buy, let's say at the time, half a Bitcoin. Well, now through a lot of trading and everything, you end up, selling that Bitcoin, and you sell 10 Bitcoin on Coinbase. And now, you've nearly 20x'd your investment. Well, you're going to pay taxes on that difference. And from what I understand is it's created like capital gains tax, where long term, I believe you only pay, trying to think, I think it's only 25, maybe, and actually I think it's only 15%. If it's short term, I think it's 25 or 30%. But again, that's something you have to do research on your own and consult a tax professional, which right now H&R Block, I know, is helping people with their cryptocurrency taxes. As about a month ago, they started actually having professionals dealing in cryptocurrency taxes, which you can get help with. So again, that's the best thing to do right now. And basically the IRS is just trying to create some leeway and some guidance to what is a taxable event and how you're taxed. And then it also says here that the new guidance allows for first in, first out accounting, or specifically identifying when the cryptocurrencies being sold were acquired. And so again, a lot of these terms are similar to stock trading. So again, research those, and you can see exactly how they are related. But a lot of times, they are related, similar to stocks, in that long-term or short-term capital gains tax. So just something to keep in mind. The IRS is cracking down on this, so definitely get your taxes in a row sooner rather than later, because they will come after you if, eventually down the line you're making a lot of money and you don't report your taxes for 3 or 4 years, and then you just have a lump sum out of nowhere. So just keep that in mind. And please, if you have any questions, again, consult your tax professional. But if you have any questions about this video, please comment below, like the video if you liked it, and please subscribe if you haven't. I really appreciate every one of you who watch my videos. It means a lot to me. Until next time, thanks for watching.